NIO intends to capitalize on the growing demand for environmentally friendly automobiles. Despite fierce competition, the EV startup is seeing a recovery in deliveries as new models are released. Should you buy NIO stock now that it seems to have hit bottom? Can we expect NIO to turn a profit as expected? Relax, TechZen has got you covered, so stay tuned. NIO was founded in 2014, and despite being dubbed the Tesla TSLA of China, the company has since shown impressive growth in sales. NIO, like Tesla, produces high-end electric vehicles. NIO works with a state-owned automaker to produce electric vehicles. After the electric vehicle, EV, manufacturer NIO Incorporated submitted its key 2022 earnings sheet. The stock price of NIO Incorporated jumped, but the stock quickly lost some of its value as investors dug deeper into the company's results. NIO exceeded revenue forecasts, but the EV manufacturer fell short on earnings due to widening losses caused by production delays in the second quarter. The shipment forecast for the third quarter of 2022 is positive, but NIO and the stock are facing increasing challenges. As a result of these factors, NIO is still on ice. Revenue goals surpassed. Strong third quarter shipping expected revenues for NIO's second quarter were significantly higher than expected. But the electric vehicle manufacturer's losses widened, causing it to miss on earnings. The $1.48 billion in Q2 2022 revenue that NIO reported was over $62 million higher than analysts had predicted. A 21.8% year-over-year increase was seen in NIO's quarterly revenue of 10.29 billion Chinese yuan, which is equal to approximately $1.54 billion. Despite the fact that the electric vehicle manufacturer was held back by supply chain problems and COVID-19 lockdowns in Q2 2022, NIO's revenue growth was still strong. NIO's shipment projections for the third quarter also looked promising. Their projection for the third quarter is between 24,500 and 26,000 EV deliveries, while the latest forecast from NIO predicts 31,000 to 33,000. Consequences of widening losses, including mounting pressure on vehicle margins. NIO's widening losses were the most disappointing part of the company's earnings report. The net loss for NIO in the second quarter was 2.76 billion Chinese yuan, or $411.7 million, an increase of 54.7% from the first quarter's loss of 1.78 billion Chinese yuan. NIO has incurred these losses as a result of the substantial investments it has made in the production ramp of its new models of electric vehicles, including the recently released ET7 and the upcoming ES7 ET5. While the increase in losses was unexpected, it is not NIO's fault that it is facing increasing difficulties due to factors like government-mandated factory shutdowns and rising battery costs. The vehicle margins for NIO continued to fall in the second quarter. As a premium producer, a decline in vehicle margins is a clear warning sign to investors that profitability pressures are increasing. During Q2 2022, NIO saw a decline in vehicle margins of 3.6 percentage points year-over-year, bringing the company's total vehicle margin down to 16.7%. Additionally, they were down 1.4 pp from the previous quarter. Although NIO and the electric vehicle industry as a whole face a challenge due to rising costs, manufacturers have already raised prices for their products in the first and second quarters of 2022. In FY 2023, NIO may see an improvement in margins if cost pressures force the company to raise EV prices again. But this may come at the expense of slower revenue growth. NIO's share price may revalue lower if the company's vehicle margins continue to decline in Q3 and Q4. NIO's cost valuation. The recent wave of COVID-19 lockdowns in China, which affected 65 million people, has the potential to weigh on consumer spending. And since NIO's revenue estimates have dropped off in 2022, everyone is neutral on NIO's valuation. The price-to-sales ratio for NIO's stock is 1.9, which places it in the same ballpark as Li Auto, LI, which has a PS of 1.8. XPeng's market cap is equivalent to 1.4% of the company's expected revenue in the fiscal year 2023. NIO dangers. The supply chain crisis is still having an effect on NIO's delivery potential, and this is the main source of risk for the company. The significance of these timeline risks has grown recently due to the increasing number of COVID-19 lockdowns in Chinese cities. NIO faces a commercial risk from the decline in vehicle margins. When compared to its competitors, who primarily sell cheaper electric vehicles, NIO stands out as a premium producer of EVs. Consistently falling margins could indicate that it will be more challenging for NIO to turn a profit off the sale of electric vehicles. Fundamental analysis and earnings report for NIO. NIO falls short on essential earnings and other fundamental metrics. As a young, rapidly expanding business, it is still searching for ways to increase its bottom line. The EPS rating for NIO stock is low at 2. Earnings per share, EPS, is a measure of a company's profitability relative to its peers. Based on the SNR scale from A+ to E, NIO has been given a rating of D sales growth, profit margins, and return on equity are all factored into the SNR rating. NIO reported a 20-cent per share loss for the second quarter. When combined with a 14% increase in EV shipments, the overall increase in revenue was 22%, which was better than expected. NIO's losses were more than doubled to 64 cents per share in 2022. Indications are that revenue will increase by 43%. In 2023, they expect NIO's losses to be reduced to a 29% share on revenue growth of 81% thanks to the introduction of new models and the company's foray into international markets. Increased rivalry in China's electric vehicle market. NIO aims to sell high-end electric SUVs and cars in China. That industry is currently dominated by Tesla, but a number of Chinese EV startups are showing signs of being serious contenders. Sales-wise, Tesla is currently light years ahead of upstarts like NIO. In 2023, NIO is rumored to be launching a mass-market sub-brand. Electric vehicles, EVs, manufactured in China are sold to consumers in a number of countries, including China. In the first half of 2022, Volkswagen's EV sales in that country surpassed NIO's. The Chinese electric vehicle, EV giant BYDF, is another potential threat. Even Tesla is losing ground to Warren Buffett's BYD. NIO CEO William Li predicts that electric vehicles will account for 90% of all new car sales in China by 2030. While NIO continues to grow in China, the company is also making strides abroad. Its electric vehicles are only available in Norway, but by 2025, the company hopes to have expanded into 25 additional countries. As part of a larger rollout in the European market, NIO has been sending ET7 sedans there. NIO is the first company to introduce a revolutionary battery subscription service. NIO essentially sells the vehicle and the battery as two distinct products. NIO EVs can be purchased batteryless for a lower initial cost, with the option to rent batteries for a monthly fee. Should you put your money into NIO right now? NIO, a Chinese electric vehicle startup, is still losing money despite impressive revenue growth. With a powerful brand in China, the world's largest market for electric vehicles, it is expected to pose a serious threat to Tesla in the coming years. New electric vehicles and international expansion provide NIO with additional room for development. However, competition among EV manufacturers is heating up, with BYD and Volkswagen increasing their pace to take on Tesla and NIO in China. With the release of their new models, NIO is expecting an uptick in EV sales. However, after the chip crisis, battery supplies may pose an even greater challenge for EV stocks in general, though NIO's intentions to enter the battery business may provide some buffering. NIO stock is expecting a long road to recovery. Although it has been making progress toward a new buy point of 24.44, the promising and high-growth EV stock is still significantly below the entry level. The stock of NIO is currently not a good investment. But stay tuned for updates because it might happen soon. Do you anticipate that NIO's role in the coming years will grow in significance? Tell us in the space provided below. As for me, I'm calling it a day. We hope the video was entertaining. We can't do this without our fans, so please subscribe to our channel to see more of our incredible critiques.